Dear students, now that we have switched to an online learning setup, this is the first lecture of the series of lectures on international political economy. In today's lecture, we will study three important concepts. First one is multinational corporation, the second one is foreign direct investment, and the third one is transnational corporations. So multinational corporation, the name says it all. Multi and national means you have a firm in different countries. A very simple definition could be that you have a firm in more than two countries, but basically a better way to say it is to say that you owns operation in two different countries. And what do I mean by owning operation? Let me explain you. So imagine that you buy a 2% share of a foreign company, and the purpose of buying those shares is to get some profit to invest in your original company. You have a business in your home country, and you want some profit, and so you invest in some from the profits of your original company. You make some investments in a foreign company, which is just 2% share of that company. So you get some hold on the operations or of that country, but it's a limited, very limited ownership, and you are to decide whether you can consider this to be a multinational corporation, because now you have um, shares in your own company and shares in another company as well. Unfortunately not, because multinational corporation, to understand the concept of multinational corporation, you have to understand the concept of foreign direct investment, because multinational corporations are involved in foreign direct investment. Foreign direct investment is a flow of funding. It's investments that are made by an investor either to establish a firm in a foreign country or to acquire a firm in a foreign country. In both these cases, if you're establishing a firm or acquiring a firm, you hold the more than 50% share of that company. In case of establishment, you actually hold almost 100% share of the company. And in the third case, you can expand a foreign firm. So you can invest an existing foreign company and make it expand, or you can finance a foreign company by some of its shares. But the the condition is, in all four cases, in any investment to fall as a foreign direct investment, you must buy at least 10% share of the foreign firm. It can be 100%, it can be 50%, it can be 12%, but it cannot go below 10%. So an investment in a foreign company which goes above 10% share of that company is called foreign direct investment. And multinational corporations or multinational companies, MNCs, are companies in which an investor has more than 10% share in two or more countries. And let me explain this concept to you through an example. So imagine you own a boutique um, in Pakistan. So Pakistan is your home country. Your boutique will be the parent firm, and then you decide to establish another boutique in UAE, knowing well that you have a market there, and since you've established the new farm, you own all shares of all shares are owned by you. So 100% it is owned by you, and that UAE will be termed now as a host country where you have established an affiliate farm. So the boutique would be termed as an affiliate farm. Your farm, the original farm in Pakistan, would be termed as the parent farm. Uh, then you decide that you need some um, market. You need to reach the market in Malaysia, for instance. So you went to Malaysia. You go there and you visit a boutique there, and you decide to invest in that boutique, and you have a meeting with the owner of that boutique, and you said that I want to open a new shop of the same boutique, and in that shop I will send you some clothes made in my boutique, designed in my boutiques, and you can in addition to your own clothes, you can add them as well. So you have a contract signed, and you in return for displaying or and selling your products in Malaysia, you will take care of all the expenses of that for the building of that shop. So you make some investment in that company, and that investment is less than 10% of the total share of that company. In that case, that Malaysia, the firm you have, the investment in Malaysia would not be termed as foreign direct investment. It will be termed as the foreign portfolio investment. And despite the fact that you are earning profit from there, you have an established operation in Malaysia, you are selling your product there, and despite everything, you are you cannot be termed as a multinational corporation because the boutique is still owned by the original farm, and that original farm is selling your products there. Just a few operations are owned by you. Even then, it will be termed as foreign portfolio investment because it is a foreign investment. You're making investment in a foreign country, but it will not establish a multinational corporation. You will be termed as a multinational corporation because of your affiliate farm or a subsidiary. We use two terms, affiliate farm or a subsidiary. You have a subsidiary in UAE. So this was to teach you the terms parent farm, home country, affiliate farm. Try and understand these terms. Finally, to understand TNCs or transnational corporation, which is a relatively recent concept, in multinational corporations, decision making is centralized, and all the decisions are the main decisions, administrative decisions are made in the parent firm, and all subsidiaries and affiliates follows this decision. So all the investment decisions or the business decisions are made in the parent firm, and then the decisions are delivered to the all the affiliates and subsidiaries, and they follow them as it is. The concept of TNCs has emerged because in transnational corporations, unlike MNCs, the decision making is decentralized. And there is no farm that can be termed as a parent farm as such, because all farms, all operating in different countries, they have their own decision making mechanism, which allows them to make decision in accordance with the environment in which they are investing or they are doing business. So these farms where decision making is being held in all affiliate farms, every single farm is making decision in addition to parent farm. To be true, there is no concept of parent and affiliates in TNCs because every single farm is making decision on an equal basis. So but you can say call a farm to be a parent farm. In TNC based on the origin of that MNC, from which was the main country, first country where the TNC started operation, and then it got spread to all other countries. So this is today's lecture. I hope the concepts of multinational corporation, foreign direct investment, and TNCs are clear. If you have any question, you can definitely send me comments below this video or in Google Classroom where I will share this video and in through your class representative.